Okay, so share my screen, and what I want to share is this. So I'll put this in full screen. You should all be able to see that. If somebody can't, please let me know. Andrea, unmute yourself or something and let me know if that's not the case. Okay, so the investor event this year is taking place in Granada. I'll explain briefly in a second what the hub is, because some of you might not know. But this is our third investor event. The first one we did in Seville. All of them are in Andalusia. The idea is to always do them in Andalusia. The first one was in Seville, the second one was in Malaga, and this third one's in Granada. What we're doing is if you don't know Alhambra Venture is the largest investor event in Andalusia. And so what we're doing is the day before Alhambra Venture, we're going to do the investor event, and the first morning of Alhambra Venture, we're going to do the investor event. And then the Alhambra Venture will continue afterwards. So it sort of becomes a two for the price of one, both for the investors and for the startups that are coming. So just to very quickly, if you don't know the hub, very quickly go through the hub. So the hub is an association. We're a non-profit association set up. It's 4 and a bit years ago now. There were actually 3 of us initially. Now there are 2 of us left, Sergio and myself. And the idea there was always to promote smart mobility startups, assist smart mobility startups in terms of sort of, you could call it sales, acceleration of sales through putting them in contact with corporates for open innovation programs, assist them with investment, and that's the part I do. Sergio does the open innovation. So assist them raising investment, put them in front of investors that in particular smart money investors. So those that are specialists in mobility, help them with communications. So Andrea, that's I guess behind, or Beatrice, one of the 2 of them that's behind the logo here. The person connected is Connected Mobility Hub, help startups with communication, and generally in terms of networking. So we've got probably the most active thing we do is the WhatsApp group, and you know, anything that anybody sees that is of interest for other mobility startups, or that we see that are of interest for the mobility startups, we include to the networking, to the WhatsApp group. Sorry. So this is basically very general terms the numbers. So we've got 120 specialized investors in our investor data room. We'll go through that in a bit. It's Startup Includer. Some people don't have it as updated as they should if they want to raise money. There's just over 135 mobility startups now within the association. It's probably about 60% of them are actually in Spain. That's why often the things that we do, unfortunately, end up being Spanish first rather than English first. But the other 40% are from across Europe. It's mostly Southern Europe, but Portugal's obviously quite large. France is quite large. Germany's also quite large. Got a couple more than a couple actually from the UK, Scandinavia, etc., etc. There's over 70 corporates that we work with in terms of open innovation platforms, and we have at the moment on the data room, we have over 50 million euros in open capital rounds. So in terms of sort of the communication side of things, I was saying, so what we do to support the startups and give them more visibility within the market, whether that be to corporates or to investors. Well, we have a blog with only 34,000 readers. It only talks about smart mobility, so there are only people that are interested in smart mobility. Most of them are subscribed to the blog. Then sort of more general social media. Well, there's about 3,500 people on social media, which is probably predominantly LinkedIn. Then we do a load of different events. So almost all, if not all, I think, of the mobility events, for example, in IFEMA, which is the largest, it's where they've got the temporary hospital at the moment in Madrid. It's one of the largest exhibition centres, in Spain. All of their events revolving around mobility, where we run the sort of the open innovation side of things. Same with the Malaga, and we're now putting together a collaboration with Smart Mobility Congress in Barcelona as well. And then there's loads of other events that we work together with. Next thing, I won't go into the mobility sector. Everybody that's connected, I would imagine, realizes that there's a change in paradigm in mobility generally, and that's why the whole thing's set up. Important thing though, okay, investment we've spoken about, collaboration. The collaboration between the startups for us is fundamental, and the collaboration between the investors and the corporates and the startups is also fundamental, and that's one of our key areas of focus. So last year's investor event, there was a bit of a issue last year because we did it together with another event, but we did it after the other event, and there was a bit of confusion as to the date. So we did actually have 100 investors, but I think 50 of them came to the day with the startups, and 100 of them came to the day which was just for the investors, which you'll see. I think there were actually 140 that were signed up, so 140 of them did receive the one-pagers, the brochure that we put together. We had 75 of the startups from within the hub. You have to be an associated startup to join the investor event. 75 of them applied. We selected 20. We organised more than 50 one-to-one meetings. The one-to-one meetings are an absolute nightmare to organise. We're going to do it better, undoubtedly this time, third time lucky. But we did formally organise 50 one-to-one meetings. Some of those meetings are actually post-event. So if you do join the event and there's an investor you want to speak to, or there's a startup you want to speak to, well, just let us know and we'll organise it. And then the funds went from minimum tickets of 250,000 up to 10 million, and then we have a series of business angels. So we try to cover all the different investment stages of a startup. The participants, won't go into much detail of this, but you've got sort of here are the 20 startups, and here are most of the funds, if not all the funds. Okay, so the event this year, as I explained at the beginning, we're doing it on the day previous to Alhambra Venture, in collaboration with Alhambra Venture in Granada. Alhambra Venture is now the 3rd and 4th of September. It was going to be beginning of July, but COVID-19 got in the way. So Alhambra Venture is now the 3rd and 4th of September, and we're going to have our event on the 2nd and 3rd. You'll see the full agenda in a second. So please save the date. For the startups, it's the 3rd. So for the startups, the most interesting thing is the 3rd and the 4th. Because the 3rd in the morning, we've got our event. In the afternoon, Alhambra Venture continues. And then on the afternoon, the whole day of the 4th, obviously it's Alhambra Venture as well. Same as last year, we divide it into 4 different categories of startup. So logistics, shared and electric mobility, smart cities and sustainable mobility, and connected and autonomous technology. Within each of those categories, so there's 5 startups per category. Sometimes logistics ends up with a little bit more than the rest, but I guess that's a trend. Maybe this year it will be sustainability with more. But to date, it's been logistics, say 6, and connected autonomous tech maybe with 4. But the idea is we have 5 per subsector, sub-vertical, and within those 5, we have at least one that's early stage, and at least one that's Series A or Series B, so that the funds that come that have larger ticket sizes have got a target investment, and then obviously the ones in the middle for them to keep on the radar, and also the business angels that we have in there who tend to be faster deciding if they're going to invest or not, also have some target companies to view. Okay, so the agenda, as I was explaining, so it's both the second and the third. On the second, what we do is we do a purely investor networking afternoon. Now the reason for this is so that the investors can get their sort of investor networking out of the system and focus 100% on the startups the following day. Sometimes you try to do both things at the same time. Most events try to do both things at the same time, and in our opinion, it doesn't work as well as dividing it up, getting it out of the system and then moving on. That also assists with sort of co-investment strategies, etc., etc. So we start off the evening with a sort of presentations about the market, investment opportunities. We then go on to everybody introduces themselves, talks a little bit about their mobility startups, the startups that they've perhaps got on the radar, the latest investments that they've done, and then the different investors can see what collaboration, what synergies there are between their portfolios, as well as obviously knowing what ticket sizes they have, what kind of investment they can do, etc., etc. And then we continue on exactly the same. Again, it's more networking, but in a more informal, unstructured format with a dinner and a cocktail. On the third, it's as I said, pure focus on pitches and startups and one-to-one meetings. So we start off with the pitches. This year, we're going to do the pitches much faster. In the previous years, we've given sort of 10 minutes for pitches, and then we split up, and then we've done one-to-ones, and then we've continued with pitches. And because we've stopped at just after lunch, basically, the startups that were in the second batch of pitches felt that they were missing out. So what we're going to do this time is 5-minute pitches, just bang, 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 get them through as fast as possible, and then we go to the coffee, the more informal networking, and then we go through to the one-to-one meetings, which is what we organise as people. Everybody comes up, they tell us who they'd like to meet, and we make sure that they actually all meet each other. And then we go on for lunch. This will be happening with the Alhambra Venture VIPs, all the investors basically that have come in from Alhambra Ventures and all the selected startups that are a part of Alhambra Venture. And then we finish, and Alhambra Ventures continues the third. It has a cocktail, a very nice cocktail actually near the Alhambra Palace in the evening of the third, and then it continues on the fourth. This isn't going to be much interest to most of you, but we've got to do it because somebody's got to pay for the party. So we do have 3 sponsorship opportunities. As you'll have seen here, well, 1 gold sponsor, 1 silver sponsor, and 4 bronze sponsors. So if anybody's listening that might be interested in sponsoring an event, please let us know. That the sooner we find out that somebody's interested, and the sooner we put it in place, that the more visibility they're going to get, because obviously there's already communications and press releases being done because we're at the process of selecting the startups. So if you'd like to be in contact, we'll get in touch. This is my Connected Mobility Hub email, tom@connectedmobilityhub.com. You've probably seen the post that I've done on LinkedIn if you don't already know me, and if not, just look me up on LinkedIn, Tom Horsey. Okay, so now just to go through the draft planning, and here is where I'd be very interested, and I'm not quite sure where I see the questions on this. So when I stop the presentation, I'll go back to the video and I'll probably see them then. But here's what I'd be really interested in feedback from people, because we're trying to set it up, as I said earlier, so that the investor event, when it happens on the 2nd and 3rd of September, it is it is basically, now we've done, we do the face-to-face to try and close the deal rather than get to know you session, which is what these investor events tend to be. So we're trying to turn it a little bit on its head to speed things up because of the COVID-19 crisis, because of the difficulties in raising money that people are having at the moment. So any ideas in this respect are welcome. Okay. So the first thing, the 9th of May startup registration period ends. Okay. So if you're a startup, if you're interested in joining, please register ASAP. It's on our website. You just click on investor event and you'll see down below there's a form to sign up. If for whatever reason it's not working or you can't find it, then get in touch with us either through the email on the website, which I think is info@Connecting Mobility Hub, or with myself, Tom at Connecting Mobility Hub, or with Andrea at Connecting Mobility Hub, or with Macarena Gonzalez, who works with my other head as StartupLabs, which is an accelerator and investment vehicle, and we're organising this together with the hub, which would be Macarena at StartupLabsSpain.com. So any of those you can contact, right? But if possible, do it off the website because it makes it easier. So 9th of May, that will close. 16th of May, we will announce the startups, and we start with investor registration. The reason we don't start until the startups are selected is because often investors don't make a decision or won't make a decision until they see which startups are selected, so that they can see that they fit their investment criteria. Or to see if they know them or they don't know them, they'd be interested in meeting them again, or they're not interested in meeting them, or they'd like to keep them on their radar. Of the 30th of May, we need all the startups to have updated their information on Startup Includer. As I said at the beginning, Startup Includer is our data room. There are 120 investors connected to the data room with access to the data room. So it's a little bit clunky, but it really is at the moment the best thing we've got. If you're interested in, if you're already on the room, the data room. Okay, so there's a chat here. Everyone interested in the new yes, you know, Dutch startup can certainly join. Any mobility startup within Europe, or perhaps even that's about to open in Europe can join. Okay. So sorry, I went off on. So yeah, just going back to Startup Includer. So if you're an investor, then ask us for an access and we'll send you one. If you're a startup, then please include your information and update your information if you're already on there. Because if an investor comes into your profile on Startup Includer and clicks on it and looks through it and it's not the updated information, then you've just lost an opportunity to raise investment. And I don't think right now is a moment that you would want to lose. You want to lose an opportunity. Okay, so please do that. If you don't have the access, again, I've given you our data, our contact information now multiple times, but if not, just go onto our website and ask us for it, and we'll give you the access. Okay. If you've got a suggestion for something better, also please send it to us, and we'll happily give it a look. Okay. Okay. So everybody's now on the 30th of May. Everybody's now got their information, and we started signing up investors for the event. So as of the 1st of June, theoretically, well, as of the 16th of May, but certainly as of the 1st of June, all these investors will be starting to analyze the startups that are on the Startup Includer, and they'll be starting to decide which of those startups are of interest to them and which of them aren't. Again, very important. On 30th of May, you've got your data updated. Then the idea is every 2 weeks to do an online pitching session. So because we've got 4 categories, we'll do the 17th of June, beginning of July, mid-July, end of July, and then obviously August we'll leave for more conversations. And then again, the idea is that when we all meet in Granada at the beginning of September, it's more to close down deals than to get to know you. But both things obviously will happen, but the idea is that when we meet in September, we're closing down deals. So anything over this period, anything that we can do to support you as an investor or you as a startup during that period, during this sort of this 3-month period, so June, July, August, please let us know, and we'll do it. Okay. Now that's the investor event out of the way. What I'd like to do now is just talk very briefly, or again we can turn it into a Q&A if you like. Talk very briefly about the investor situation with regards to mobility, and some ideas of what you can do to help raise investment faster at the moment. So all this information that you see here is all taken from a Pitchbook analysis of investment, basically from the first quarter of 2020 and through 2019. So it was written at the end of March. It wasn't quite the whole first quarter. So generally, what did they say? Investment in mobility by VCs dropped by 15%. Most of this, don't get disheartened, most of this was because of the focus on profitability and the concerns created by the investments in WeWork, mainly. And so there was a drop in some of the large ticket investments. It wasn't so much the small ones. Okay, COVID-19 has hit automotive manufacturers very hard. That's a problem because the automotive manufacturers have been one of the reasons that mobility is the second most invested category after fintech worldwide. So if their budgets have been hit, then generally then they're going to be doing less activity. And right now, obviously, their budgets have been hit very hard because nobody's using vehicles for starters. Their factories have been closed in lots of places, and certainly very, very few people would possibly be buying a car. Those that buy online, perhaps. Also, VCs are withdrawing from capex intensive businesses. That's happening now as part of COVID. That's basically because you're worried about your investment when there's fear, there's paralysis, and obviously capex intensive businesses are those that require most investment, and so they're the ones that you investors are keeping at a distance, more of a distance. Okay, you'll see the comments that are here. I go through some positive points. Okay, so points more related to them, but a little bit more positive. So ride sharing since COVID-19. So China's obviously a great place to look because it hit them first. Didi Chuxing was down 50%. Obviously, they only had Hubei province closed, so the rest of the country was open. But 100% closed was only Hubei province. But in any case, Didi Chuxing was 50% down. So that's going to hit. That's obviously hitting Uber, Cabify, Lyft, etc. Didi Chuxing also suspended 50 markets worldwide. Okay, markets, cities, but they suspended 50 of them. Cities or countries, depending on whether it's Singapore or whether it's Hong Kong or whether it's the US. Uber and Lyft suspended carpooling for obvious reasons to maintain social distancing. And there was a 55.9% drop in deals generally in 2019. Again, this is more related to the WeWork and the focus on profitability than anything more general in 2019, not 2020. So electrification, NIO sales are down 40% in the first quarter. So NIO's a Chinese manufacturer. That's for multiple reasons, but partially, obviously, the lack of confidence from the end user. With a low oil price, as there has been to date, it's starting to increase with the New Deal, but there's less reason to go electric. If electric vehicles are more expensive in the first place, then if oil's cheaper, then running them's cheaper, so it makes them even less interesting from an economic perspective. That's in the medium term. Well, less corporate expenditure means less sales. So there's going to be less companies buying car sharing vehicles. Is basically what they're referring to there, or ride-hailing vehicles. Ride-hailing we've already spoken about there. So if there's less of these corporate purchases, well, there's going to be less sales generally. Okay. So IoT, the CVC investors have been hit hard by enterprise cost cutting. This is a little bit related to what we were talking about earlier of the automotive manufacturers. And the CVCs have in IoT have been the most active investors. So Intel, Qualcomm, Sony, Samsung. So if their budgets are being hit, their CVC's budget is often being hit, and that means less investment in the sector generally. Micromobility, well, you know, in the short term, Lime has been down 69% in March, basically. But in the medium term, so if we look at back to China again, Hello-Bike and Mobike, for example, up 150% post-quarantine. That only puts them at the same level as they were previously, but it does show that there's an interest in micromobility, and I think that makes sense, right? Because there's far less possibility of infection taking a bicycle or taking a scooter than there is going into a carpool, or ride-hailing with another driver, or car sharing where you're touching and you're breathing air that somebody else has been breathing. However, is there more consolidation? You know, it hasn't been a terribly profitable business to date. There's been a hell of a lot, mainly because there's been a hell of a lot of competition. So given the fact that VC investment was already down 53% in 2019, and now a lot of companies have been hit hard by COVID-19 quarantines. And there was a lot of competition beforehand. There's a large possibility of more consolidation in the market, which might be good for those. There already was consolidation in the market, but there's probably going to be even more, which could be good for those who are already running micromobility services. Autonomous tech. So testing has been suspended, basically, I think, by everybody apart from Alphabet. Alphabet probably suspended now. This is, as I say, goes back 2 weeks. So Waymo, Cruise, Argo Pony have all suspended their testing, and that means that obviously while they're not testing, they're not advancing because their algorithms aren't learning. But VC activity is probably due to drop. You know, again, if oil prices have dropped, this means that for trucks, for example, where you can increase your productivity, reduce your fuel consumption by adding in more levels of autonomous driving, that there's less economic necessity to do that. Again, will there be a shakeout in the market? Well, you know, Pitchbook seem to think that there will be, and the low oil price, again, as I was just mentioning, but it possibly means, or they feel it means, more sales of level 2 or 3 vehicles, so more sort of ADAS style vehicles, and less level 4, 5 in investment generally. Okay, so let me just go back to, I saw there was stuff in the chat. Let's see. Is there anything I should mention here? Startup include. Willing to see we can make the. Oh, I didn't want to see. So Adrienne, I'll come back to you in a second, because this is basically what I'm talking about below. How you can take, or what you can do really to improve your chances of raising investment at the moment. Before COVID, okay, all right. So in terms of, well, sorry. Before that, I'll just go through the comments that I came here. So I said, so what I was saying is, that's in the way for me. So car sales will come back. So at the moment, the automotive manufacturers are hard hit, but car sales will come back. You know, private transport is going to be preferred to public transport. So they're going to start selling more. This will also mean that startups along the lines of Click and Drive as a car hire company, or EcoCar as a SaaS solution for car hire companies, or will probably have more business, because there's also a sort of a longer term trend of people not buying their own vehicles. But you know, private transport is certainly going to be preferred to public transport. In fact, in Spain, that's what they've been recommending at the government level. There's also going to be more national tourism as opposed to international travel. So again, going back to sort of car hire, subscription services on cars, you know, if you're doing national tourism, it's probably because of the sort of the feeling of patriotism, and we're all going to stick together in this, that will continue after the crisis, but also because you feel more secure driving your own car than you do getting into a tube of metal for 2 hours breathing other people's air. So if there's national tourism, then you're going to be driving to places more often than perhaps getting a bus or another method of mass transit. Ride sharing, again, even though they're down and they've stopped carpooling for the moment, it's still probably preferable to public transport. You know, in Spain, they're saying that you can have one person on every row of a car. You know, cars in theory could potentially, as if you're wearing masks and you've got good hand hygiene, or you're wearing gloves, or you're using alcohol wipes or wash, you could theoretically have poor people, and people would still be basically a meter away. Which, if you're wearing masks and you've got good hand hygiene, so that what you're touching isn't infected, then that could be obviously preferable to public transport. Apart from anything else, because it's the same people going in a vehicle for a longer distance, there's going to be a more sense of obligation by the other riders to keep everything clean and to keep high levels of hygiene that perhaps in public transport. You know, the 5% of people that don't seem to care are probably going to be more likely to be in the public transport than the carpooling. And then you've got things like, I talked about Angry Media here. So Angry Media have a vending machine that goes into VTCs and ride-hailing vehicles, even public transport, car-sharing vehicles, and it's a little vending machine that you can take out different items from the vending, where you could provide a little bit of hand wash and alcoholic wash and masks or gloves in one of these little vending things. If somebody does go to a carpooling, or does go into a taxi, or does go into a ride-hailing vehicle, you can force them in effect to buy these items that they then have to put on and keep everybody more secure that's in the vehicle, and everybody that comes in the vehicle afterwards, of course. Generally, I think anything that increases users' trust in the system is going to help. There's a low appetite for risk at the moment in everything, in our personal health as well as in finance. So anything that somebody can do to increase trust is going to help. Electrification, okay, even though there's a lot of disincentives at the moment for people to buy vehicles, electric vehicles at the moment, because of low oil prices, you know, there's actually not that long to go until, at the moment, as the laws stand, a lot of vehicles need to be electric. You know, I think the UK was 2025 in the end, or 2030. I think it was 2030. So you know, that only gives us 9 years in effect, where 100% of sales have to go to electric. So there's even less time post-COVID. So you know, it will have to accelerate. Even if it takes longer to accelerate, it will go even faster when it does accelerate. It will be a pure V curve. So I can't see. Next thing, so IoT, but there will be, so IoT might be down, but there will be more smart city investment related to COVID-19. You know, there's going to be, we have to put in, the governments are going to have to put in place social distancing, so there's going to be more control over users' movements. We're going to be using different types of transport. Undoubtedly, there's going to be more walking. We're more interested in wellness, so we're more likely to want to do exercise as well as stay away from other people. So you know, we're going to take less public transport, perhaps more scooters, less carpooling, less buses. So there's going to be completely new traffic patterns. So IOMOB, for example, has a mobility as a service solution which factors in social distancing as one of the parameters to take into effect. At Cyclogreen, that basically they gamify the use of sustainable mobility for town halls, universities, companies. They're actually tracking traffic patterns there, and they can provide, and I'm sure many other companies could provide information on new traffic patterns to town halls. Let Me Park allows you to reserve parking in advance. If there's more private transport being used, well, there's going to be more problems with parking. People aren't going to mind so much about walking further because they don't want to go with other people, and because they're more worried about their own health. So again, there's opportunities there to maybe find a car park, even if it's 300 meters, 500 meters away from where your end destination is. People will be prepared to do it, but you want to have it reserved in advance. So you know, there's solutions of that kind will be of more interest. So micromobility, as I was saying, there's a hell of a lot less chance of infection on a scooter and on a motorbike if you're using your own helmet. And then other things, because these guys, Pitchbook didn't talk about logistics. So logistics isn't going through actually the best period. It's not going through a bad period, but there's a lot more competition in terms of logistics as well. You know, Cabify have started with logistics. You know, Uber have started with logistics. And food delivery, for example, dropped. E-commerce has gone up, but not actually as much as you would think generally. However, it's obviously the whole issue of last mile logistics, or generally logistics, and the provision of the whole chain of logistics to provide products to end consumers is obviously going through a decent period. An example of that is Bring, that has just raised $30 million literally this week. So you know, the thing, not everything's stopping. Those areas that are going well are still working well. Cycling, well, everything related to cycling, not right now obviously because people can't go out, but you know, cycling, it's a cheap method of transport, it's a personal method of transport, it's a healthy method of transport. One could assume that there's going to be a lot more cycling and services related to cycling. Semi-mass transit, you know, whether that be something like Go-Go Networks, that's a project in place for the minibuses to take people from A to B, or whether it's for a shuttle that works with public transport companies to do dynamic routing, again for semi-mass transit, basically minibuses. There are opportunities. It's not all bad. Okay. So anyway, just going back to investment, what to do? You know, you'll have heard this 100 times, but it really is important. Cash runway is king. This is important for two different factors. One is it's going to take longer to raise money, undoubtedly, because in periods of risk, people take longer to take decisions. or they don't take them at all. It causes paralysis. But even if they do take them, they're going to look at the everything much more closely than they would have done otherwise. And you know, so it gives you that time. But also, it's really important. You know, there was already a focus on profitability. As we said, that's why, you know, these investments were in ride sharing, for example, were down. It already in 2019. Okay, we could blame it on WeWork, but it happened, and it was bound to happen. So if you can have your income as close as possible to your costs, it's going to be more attractive to investors, whatever happens. So it gives you more time by reducing costs and extending your runway. But at the same time, by doing that, you're going to have your costs and your income closer, if not break even, a small loss, or maybe a small profit, or maybe a large profit. But the smaller the loss, the more likely it is that somebody's going to invest. You've taken away a reason for them to say no for starters. So again, focus on profitability for the reason I just said. And then adapt. Okay, that might sound simple, and you know, it's all part of lean startup. But apart from the fact that you have to adapt to the changing circumstances, even though, you know, some of them are more short term and some of them are longer term, it's also something that investors are looking at. How have you responded to this crisis? You know, if you've responded well to this crisis that nobody was expecting, that 99% of the world population wasn't expecting to happen, then you can really respond well to any crisis. And at the end of the day, and we can go back to the WeWork example, investors do invest in the personality of the CEO, in the capabilities of the CEO and the founding team, as they did with WeWork. You know, so if you can show that as a founding team, you're able to adapt in one of the most complicated situations that a company might ever have to face, then that is going to build more trust in the investors, and trust and risk assessment, opposite sides of a coin. So one counters out the other. Sorry, of a seesaw. So remember, and this isn't another really important point, investors need to invest. So CVC investors don't. They do strategically, but it's not, you know, they don't have the same urgency to invest as financial investors. Financial investors need to invest. That's their only reason for existing, is allocating money where it gets the best return. So if they don't allocate the money, they're not doing their job. They don't have a job. So you know, this really is temporary. It's just at the moment there's a very low appetite for risk because of the you know, fear, basically, and uncertainty about what's going to happen. Another really important point, and often forgotten, is that investment funds tend to be 10 years from end of fundraising to closing off the fund. And during those 10 years, there's normally a 5-year window for investment. Sometimes there's a 3-year window for investment in more early stage. And then there's a 5-year window for disinvestment, for selling, or a 7-year window for selling. So those funds that raised money 4 years ago, or those that have a 3-year investment window 2 years ago, are now in a situation where they're in their last year of investing. And this is really important, and those of you that don't know it, an investment fund manager charges the full annual commission on all the funds that have been signed off at the beginning of at the end of the fund, by the end of the fundraising. However, they do calls for that money. So if you sign off, okay, I'm going to invest €1 million, and you've got 5 years for investment, and every year, more or less. It might be a little bit more at one point, a little bit less another, but on average, theoretically, every year you're going to be asked for 200,000 euros. At the end of the 5 years of investment, you put in your full 1 million, which is what you signed up for at the beginning. During those 5 years, you'll charge commission, the annual commission, on the full amounts, on the full 1 million. At the end of the 5 years, you only charge the annual commission on the amount that's actually been invested. So if they've only invested 600,000, then they're losing 40% of their annual commission. Yes, because, you know, in the 5 years of selling, you know, there should be carries, so they make a percentage on the profitability of the fund. But you know, but it's an important point. A fund theoretically will always want to invest all their funds by the end of their investment period. So those funds that did raise money 4 years ago are good targets for you, or as I say, 2 years if they're a 3-year investment period. And then the last point that I think we need to remember is that the most successful startups have been founded historically, or a lot of the most successful startups have been founded in crises, generally in the global financial crisis. Again, it was more the startup world, so you could say it's you know, it's not that statistically relevant, because we've only really gone through 2 crises since startups existed. There's the dot-com bust, and then the global financial crisis. There haven't been that many huge crises, but it is true that some of the most successful startups that we know of that exist were founded in crises. And this goes back a bit to the whole issue of adapt. If you can show that you can adapt to a crisis, then obviously you reduce the risk level for an investor to invest in you. Okay, and then a few additional points that I added in. So close down what investors you can. If you've got investors that have already know you, close them down. You know, if that means probably focusing on the reasons that they might be saying no. So you know, be proactively close down those reasons for saying no. If you know that they're worried about your burn rate, well, you know, reduce your burn rate and then show them that you've reduced your burn rate. If they're worried about you know, your strategy, well, modify your strategy and go back to them and show them that you modified your strategy. Reduce your valuation. If you know, if you've got somebody that's close to closing, well, you know, if it's better to close them, it's going to be far easier to close them than it is somebody new. So perhaps you reduce your valuation for them. You could set milestones. You could say, okay, you can invest according to milestones. So as each milestone's hit, you do an additional investment ticket, or do it the other way around. If you need the money urgently, you say, look, come in at the valuation of 10, and if I don't achieve these milestones, then the valuation will decrease. So I'll give you more percentage for your more percentage for your buck, as it were. And very importantly, if you've already got investors, you know, focus on follow-ons. There's a huge psychological weight to losing. You know, it's far more important to us to not lose than it is to gain. So you know, you can take advantage of that in terms of follow-ons and say, look, if I don't get the money, it's all going down the toilet. And that is going to be of more psychological weight than you know, invest because you're going to make a hell of a lot more money. Both things are obviously help, but you know, but generally follow-ons are going to be easier. They already know you as well. You know, for them, it's almost insider trading, because they know how you work. They know how the business operates, what the founding team's like, what the strategy is, what the strategy has been, how the strategy's changed. You know, they've got all that information at hand. So the risk of their doing additional investment, if the business has decent potential, is much less than with something that an unknown, right? So that's basically it in terms of the presentation. So I'm going to stop sharing. And then I'm going to try and have a look at the chat if there are any more questions. I can't, I think Adrian, Jalan Party questions. Okay, cool. If anybody's got additional questions, I think I've answered the ones that are here. So Adrian, I think I've answered you. Simao, I think I've answered you. If there's anything additional that you'd like me to answer specifically, then please put in a question now. And if not, we'll close off and say goodbye. I'll just give it a couple of minutes before they sort of log off. So just going back to where we were and the timetable we were talking about, so that we've all got it clear. On the 9th of May, the startup registration period ends. If you want to register for the investor event, then you need to do so by the 9th of May. By the 30th of May, you need to have uploaded all your information to Startup Includer. If you don't upload all your information to Startup Includer, you're not going to get the most out of these 3 months, put it that way. And for those of you that do have information on Startup Includer already, so those of you that have been in previous investor events, I highly recommend that you update it, because the investors will be coming in. They tend to only go into the investor room, so the data room, really when we've got some kind of event going on. So when we've got one of our investor events or one of our webinars going on. But that's obviously what we're going to be doing right now. So during the month of May, I would imagine that almost all of them enter the data room. And if your information isn't updated, then you're missing an opportunity. And then during June and July, we'll do online pitching sessions for the startups that we selected over the period. Just one last thing, because it is, I think it is very important, that what we look for is for collaboration between all the startups. So of the 20 startups that we select, it would help us enormously if, one, you invited your current investors, because if they're investors in your startup, it's very possible they're going to be interested in investing in other of the startups that are participating. And if all of us do that, then it helps everyone. And the second thing is that if you have any target investors that you'd be interested in meeting, then please let us know, or please invite them to the event. I think that's it. So I'm gonna log off now. There's been no more questions. Thank you very much. I hope you found it interesting. Look at basic country Spain. Yeah, fantastic. Mike, there's a lot of the investors are Spanish, and because we're doing it with the Alhambra Ventures, there'll probably be more. I mean, that's not to say that it's not of interest to startups from outside Spain, but it's, I would say, to date, it's been more interesting for Spanish startups, or those startups that are thinking of doing business in Spain, than it has been for the international ones. It is true that this year we have, I would say, about 50% of investors that come from outside Spain. So this year is going to be slightly different. So those that have already said that they'd be interested in attending, I think there's 150 odd. So we're assuming 100 will turn up in the end, but to date there's about 150 odd that have said that they would come. Okay, I've got some question Q&A. I'll go to that now. So, but of the 150 odd, half of them are from outside Spain. Okay, so Q&A. If the COVID situation gets to December, I guess the event will take place online as well as the pitches. Probably. It obviously helps if we can do it face to face. So if it depends what the situation is at that point. If the situation obviously means that it's not going to be able to be done in the last quarter of so either September or last quarter of 2019, then it's probable that it will be extended. I mean, there are a lot of other opportunities. So we have November, the Smart Mobility Congress, and during Smart Mobility Congress, we're actually running an investor event. So perhaps we join them together, or we try and do it online. We'll see. And next one, hi Tom, I'm working in operating a company gives full service to whom. So the short-term rental car business, this is really what I was referring to earlier when I was talking about the private transport. Right now it's obviously been hit really hard. We saw that the French government has provided 225 million euros, I think it is, in loans specifically to Europcar. However, when we come out of it, that's basically been caused by the quarantine in the country, and the quarantine generally, the lack of tourism worldwide. So as we come out of quarantine, and that's starting to happen, so we've seen Austria opening up, Spain's opened up a little bit more this week. Denmark is starting to open up. As that starts to happen, then I can see people that go to work and that previously have taken public transport, perhaps looking at renting a car on the one side. When I say renting a car, that would be more a subscription rental rather than a long-term rental rather than a short-term rental. In terms of the short-term rentals, you obviously have people are going to be reverting more to national tourism rather than international tourism. For starters, some borders are closed. A lot of flights have been cancelled, and I don't think people are really going to want to go on aeroplanes much, whilst they're still worried about this whole thing. So, there will be more weekend trips away. So I think for those that there's going to be more demand in terms of people that are traveling to work or traveling to places that don't want to take public transport, and there's going to be more demand in terms of sort of weekend getaways. Okay, so the selection criteria. Number one, it has to be a company that's looking for investment. If you're not looking for investment, then just don't sign up. Secondly, we do assess the quality of the startup. So we are investors, and we will look at at all of the startups that sign up with an investor's viewpoint, because we're looking to start the whole process of putting investors or investor matching, you could say, with startups. We are going to take into account runway and burn rate that to date we haven't really taken into account, we also look at only having at least one startup that's early stage and one startup that's Series A or Series B, so that those investors that only deal with those ranges do have the potential to close investment deals at the event, as it were. That's really it. As long as you're from within Europe, or you have a view to open up in Europe, and when I say a view, there has to be a firm plan to open up in Europe. So we've had one Brazilian company that was very interesting, that had a plan to move into Europe that was able to sign up. You have to have an open round. Apart from that, we're just going to use typical investor criteria. So we're going to look at the deck, we're going to look at the team, we're going to look at the business model, the financial forecast, the plan. Just generally look at everything and filter out anything that doesn't fit the level of quality that we'd be looking for, or that investors generally would be looking for. Okay, I think those are all the questions. It's now 5:30, so thank you very much for your time. And if anybody has any additional queries, please just send them through to us, and we'll answer them as best we can. Okay, bye bye.